Good morning and welcome to 7 at 7 from the Economic Times podcasts, a daily financial news capsule to get you clued in for the day. It's Tuesday, the 1st of October, and I am your host, Bhaskar Datta. We'll start with the latest news on the war in West Asia. An expected ground invasion of Lebanon by Israel appeared to be underway early today, Reuters reported. Israel's military said that troops had begun limited raids against Hezbollah targets in the border area. The Israeli military said that its targets were located in villages close to the border that posed an immediate threat to communities in northern Israel, and that the Air Force and artillery were supporting ground forces with precise strikes, the report said. On Friday, Hezbollah's head, Hassan Nasrallah, was killed in an Israeli strike following 2 weeks of heavy bombardment that have eliminated many Hezbollah leaders, but also led to around 1,000 civilian deaths, according to the Lebanese government. Israel has said that the strikes against Hezbollah are necessary to stop close to 12 months of missile and drone attacks by the militant group. We'll turn to what is perhaps the one factor that has made markets swing across the globe over the past few months: rate actions by the US Federal Reserve. Following a 50 basis point rate cut by the US Central Bank last month, Fed Chair Jerome Powell suggested on Monday that the Monetary Authority would likely stick with a moderate pace of rate cuts going forward. This is not a committee that feels like it is in a hurry to cut rates quickly, Powell said to a National Association for Business Economics conference. With his comments coming after new data boosted confidence in ongoing economic growth and consumer spending in the US. The Fed's next policy meeting is scheduled for November 6th and 7th. On the local front, Indian equity indices fell on Monday amid heightened tensions in West Asia and a rebound in Chinese equities, prompting investors to re-evaluate their bets after last week's record-breaking run in domestic stocks. Further, with Shigeru Ishiba set to become the new Prime Minister of Japan, markets turned jittery as the incoming leader is perceived as a monetary policy hawk, thereby increasing the chances of further interest rate increases in the country. Remember how Japanese rate hikes sparked global market carnage unleashed by the unwinding of yen carry trades in August? The NSE Nifty fell 1.4% to close at 25,810.85. Meanwhile, the BSE Sensex declined 1.5% to close at 84,299.78. Japan's Nikkei 225 index slumped 4.8%. When it comes to banking and financial stability matters, the Reserve Bank of India has been keeping a hawk-eye on things. The central bank on Monday warned that it would take supervisory action on regulated entities for violating gold loan norms if corrective measures were not taken within 3 months. It also directed banks to closely monitor the gold loan portfolio that rose the fastest at 41% in August, compared with 20.4% in the same period a year ago, central bank data showed. The RBI has asked lenders to initiate appropriate remedial measures in a time-bound manner and to ensure adequate controls are in place over outsourced activities and third-party service providers. The central bank said that its on-site examination found several irregular practices followed by regulated entities when lending against gold ornaments and jewelry pledges. There's more on the regulatory front. The Securities and Exchange Board of India approved several proposals, including the introduction of a new asset class, a shortened timeline for completing rights issues, and an increase in the number of stocks eligible for same-day settlement at a board meeting on Monday that stretched for 7.5 hours. This was Sebi's first board gathering after the emergence of conflict of interest allegations directed at the regulator's chair, Madhvipuri Butch. Sebi's press statement, issued late evening, remained silent on the allegations against Butch and the HR issues raised by the capital market regulator's employees. Turning to corporate India, in an exclusive interview to ET, Sony India's managing director Sunil Nair said that the company had posted its best profit in the last 8 years and recorded an over 20% jump in sales in the fiscal 2023-24, riding a strong premiumization wave in the country and gaining from its focus on premium products. The company posted sales worth Rs 7,664 crore in FY24, while profit was at Rs 225 crore, as per company data to be soon filed with the Registrar of Companies. Sony competes with Samsung in the mid to premium segment of the market and has a very small portfolio in the fiercely competitive 32 to 43-inch segment. Bringing down the curtains on a bitter and much talked about conflict, fintech firm BharatPe and its co-founder Ashneer Grover have resolved their more than 2-year-long legal battle. The settlement concludes one of the most high-profile disputes in the Indian startup ecosystem that had sparked concerns about lack of corporate governance in well-funded startups backed by marquee investors. As part of the settlement, Grover will not be associated with BharatPe in any capacity, nor be a part of the shareholding of the company. Both parties have decided not to pursue the cases filed. Earlier in September, Delhi Police's Economic Offences Wing arrested Deepak Gupta, a relative of Grover, over allegations of embezzling funds from the company. That's all for today. Thank you very much for tuning in to 7 at 7 from the Economic Times podcasts.